Hi, my name is Chris Tubby. I'm founder of Trading for Tomorrow, and this is my macro outlook. Okay, so last week we saw stocks tumble, making lower highs every day, finishing near the lows of the week. They're now down about 4.6% month on month. Part of that's been caused by the geopolitical actions, plus delayed US rate cuts. And they just haven't helped stocks at all. And of course, what we've got to remember is this is election year as well in the States. So oil could go either way depending on the Red Sea with the Strait of Hormuz. It's a key route for oil and LNG, about 20% of global traffic for oil and LNG. And then, of course, that means that if that's having to be sort of bypassed, that Europe's going to suffer the most, as their supplies are probably the most at risk around there. And it's worth noting that about 80% of global goods are transported by sea. So inflation's not being helped with oil. It's also not being helped. Coffee's up 27% month on month. But that cocoa rally that I've mentioned before is relentless. It's hit $11,000 a ton now. And that's up 45% month on month and 293% year on year. So watch those chocolate bars, they're going to get even smaller. With everything that's going on geopolitically, gold hit another new high after Israel-Iran sort of missiles and drones were flying around, and it's now up 11%. On the other side, Bitcoin really struggled. I mean, the halving was Saturday, and at one stage it traded below 60,000 on Friday. Before bouncing to close a bit nearer to 65k, but that volatility is truly back. It's sort of moving $4,000 or $5,000 a day at the moment. US Treasury yields continue to rise as the Fed rate cut just gets pushed back further. The Bank of England may have to wait too, and of course that's from the ones that I watched, then that really only leaves the ECB to cut in June at the moment. And of course that is weakening the euro. And if the worst happens and the Fed actually has to raise rates to stop consumer spending, then that's, people will start talking a bit more sort of heavily about seeing the euro and the dollar at parity. Last week we saw Netflix registered another great performance. Indeed, it was the best since COVID lockdowns. On the other side of that, Tesla was not so great. Their stock's down about a third this year so far. They're now cutting over 10% of its workforce. Now, Musk is still pushing for that $65 billion package, though. I mean, would you want to give it to him? If I was an investor in Tesla, I'd actually be asking him to repay some of the cash he's had already, because it's just really not performing. He always seems keen to move on to the next project. In the US, Republicans finally relented and passed a $95 billion aid package to help Ukraine, Israel, and Taiwan as well. It's still hard to know how the Middle East will play out between Israel, Hamas, Houthis, and of course Iran there as well. The Israeli PM was criticised by the governments from the hard right side of the government for the weak response by Israel after Iran fired those 300 plus missiles and drones. Yeah, to me that just seemed more of a token gesture. It was telegraphed it was coming, and it gave obviously everybody a chance to sort of shoot them out the sky as they came. And to me it just seems as though both parties, both countries at the moment want to try and avoid a regional Middle East war. And hopefully that is the case. Now, the IMF forecast growth slightly higher at 3.2%, and expects to see inflation continue to slowly drop. Of course, geopolitical issues could change that, I guess. China's boosting manufacturing, and this could cause lower prices and or weaken their currency. You got GDP Q1 came in at 5.3% year on year. Although they still got a weak labour market, especially amongst the younger generation, and of course the real estate crisis is ongoing, which in turn is impacting local government debt, etc., etc. Now, after we saw US CPI higher recently, main components of that, oil and rent, I think. This week we've got the Fed's favoured PCE inflation metric, but there's also durable goods, and there's lots and lots more data, pretty much all around the world coming out, being released this week. Some of the others is Bank of Japan has their rate meeting. We should get the Indian election results, and we're going to see earnings from Tesla, Meta, Barclays, under pressure Boeing, and there's quite a few more as well, but I just thought I'd mention some of those. So anyway, that seems to be the situation at the moment. Not much signs of a recession. Employment's very strong. For me, most of that's being taken up by part-time jobs, not full-time jobs. Full-time jobs are dropping, part-time jobs are increasing. And of course, part-timers, a couple of points there. For one of them is that they don't earn as much as full-time workers, and the second one is some of these part-time workers are balancing 2 or 3 part-time jobs to try and compensate for inflation and a reduced cost of, just value of living. I mean, the cost of living is still increasing, especially from rent and food. Okay, I'm going to move on now into part 2 after the next couple of slides, where I do some technical analysis on some of the products that I trade. But now I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market, and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers, and as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis. Hi, welcome back to part two of these that I put out each week. These YouTube posts are just really to help you to prepare for the week ahead. Hope you enjoy them. Hope they add some value. Share them with your friends, anyone that's trading or interested in trading. Okay, so now let's get started. So before I do that, just the legend, so you know exactly what's there. So the black numbers are going to be support and resistance levels based on trend lines. Pink numbers are going to be breakout levels, and claret numbers, they're just going to be horizontal levels where I've identified support or resistance, generally based on double or triple tops or bottoms. Okay, so the Dow Jones, I've got resistance at 38,332 and support, support at 37,425. Excuse me, I've added the fib levels on there as well, just so you can see how they might play out this week. Again, if we get a little bit more of a sell-off, and I think if it breaks that 382 level, it's just a little bit lower than that, I'm going to be looking to probably join in and sell the Dow. But just remember, that's just my personal view. The S&P, again, as you can see in downtrend all of last week, just got sold and sold on a daily basis, lower highs and lower lows pretty much. So I've got resistance at 5,058. I've got support at 49.61. I've got a couple of breakout levels on there. One's just around about 48.50. Another one down at 46.93, and then another support at 45.46. Again, the fib levels are on there just to try and help you. With the Nasdaq, I've got resistance 18,461. I've got support at 17,098. Couple of breakout levels on the way down, which is well below the market low at 16,330 and 15,713. Again, fib levels are on there. Now let's look at some currencies. Here's the pound against the dollar. I've got resistance at 127.16. I've added the fib levels on. I got support at 123.68. Which is pretty much near where it closed. If it goes below that, the pound is under a bit of pressure, but of course part of that is dollar strength, mainly where rate cuts are being pushed further and further back this year. The euro against the USD again is under pressure. So I've got resistance at 109.76. I've got a breakout level at 106.33 on the downside. I've got support at 106.12. Then I've got one final support at 105.41 for the moment. So Bitcoin halving happened Saturday. Let's see where it sort of reacts to that over beginning of the week. But it was, it did sort of have a couple of sell-offs last week. It went below 60,000. It did manage to recover on Friday, but I've got resistance at 65,685. I've got support at 59,580. Although if it breaks a little bit low, if it gets through 57,315, then for me that's a breakout on the downside. And then the next support's not till 50,700. Moving on to gold. I mean, it's just been stellar, hasn't it? Just rally, rally, rally. I've got resistance at 2,400. I've got support at 22.41. If it does break on the downside, 21.50 for me is a breakout level on the downside. But to be honest, I'm probably not really expecting that in the short term, especially. But who knows with these markets? I mean, it's so volatile. Last but not least is WTI. Oil's been being pushed around really just based on obviously what's been going on from the geopolitical issues that are around. I've got resistance at 87.70, support at 81.74, with a breakout on the downside at 79.53. Just oil's just being more driven geopolitically at the moment. What's going on in the Red Sea, what's going on in Israel, Russia, Ukraine, the wars and everything else at the moment. So again, it's just sort of stuck in that sort of big range, but we could see a breakout very soon depending on how these wars start to play out over the next week or so. So that's it, just another couple of slides, and that just leaves me to really wish you to have a great week. Take care and be lucky. So, just a little heads up on my services. So I offer a daily newsletter that includes global news, headlines, my views. That's a subscription service. I also offer one-day workshops. This helps you to discover if trading could be your next career or maybe just a secondary income. But the one thing is, because I offer a variety of them, is I can also just fill in any gaps that you may have with your current trading, or whether it's macro or actual trading skills. And then I offer a 1 week intensive course. That's going to make you feel confident and competent after just 1 week. And that's going to basically give you the foundations on which to build your trading career. I'm going to help you find that inner trader, and that also now includes a free trading challenge. And then there's my Flexi Masterclass. That's 6 weeks of guided learning, but you can spread them out. You don't have to take them all at once, and that does help to accelerate the learning curve. And that's designed to provide you with all the knowledge and trading tools that you're going to need to navigate these markets, and any asset class, whether it's financial, commodity, digital, I'm involved in them all. And as I say, the weeks can be spread out there, and that also includes a free trading challenge. Trader mentoring, so maybe you've already got some experience but you're looking to get to that next level and you're struggling to do that. I offer mentoring by the hour, by the day, or a monthly subscription. It's entirely up to you, but I just want to help you guys to reach that next level time and again. And of course I provide lots of trader educational content, not just to individuals but also to exchanges and brokers. And if you're looking for that funded trading account, so you don't have to risk your capital, then contact me for details. I've got 2 good ones that I use. Okay, so finally, as usual, just ending with a disclaimer. So, if you're already involved, then you'll know this. If not, then please take serious note of this, that trading does involve the risk of loss of capital and it's not suitable for everyone. However, I do hope it is for you. And now, because there's leverage involved from many companies, just be careful because you can lose substantially more than that initial investment. You know, the regulators are a bit more on top of that these days, but, you know, even so, just be a bit cautious. Everything that I include in these just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved. And that includes your financial situation, definitely your level of experience, definitely your risk appetite, and of course, only risk capital you're prepared, but more importantly, that you can afford to lose. And if you've got any doubts whatsoever, you know, first of all, think twice before you do it. Speak to a financial advisor. And do that before you risk your capital. You know, I have so many people come to me because they've lost money. I'd rather they come to me and learn how to do it and not lost the money in the first place, because that's just a waste of their savings. So anyway, I hope you've enjoyed these, and you know, I'll be doing these on a weekly basis, so I'm going to post the links in places so that you can get to them. My new website will be finished soon, but in the meantime, you can reach me at the email address below on all the slides, which is chrisjtubby55@gmail.com. And all I can say is I wish you a wonderful week. Best of luck with your trading, and hope to see you again next weekend. Bye for now.